Hello guys, welcome back to my channel. Today we are going to be looking at BPL strategy. So this is a strategy I use in trading the synthetic markets, which can also be applied to the Forex markets. I mean, when you're trading, if you are the one that trade only the currency pair, this strategy is also applicable. So if you're new to this channel, I encourage you to subscribe to it so that whenever we have important content like this, you will receive the notification and you will be able to watch the video and add up to your skill. Okay, the BBS strategy is one of the best strategy I've ever come across in trading the synthetic markets. And like I said, it is also applicable to the Forex market. All you just need to do is understand how it works and then apply them to whichever market you're trading. Okay. So when we talk about the BBL strategy, it comprises of three things. All right. I have BOT, BOS, and ROS. So the BOT simply means a break of trend. All right. Break of trend line. BOS simply means the break of structure. And ROS simply means retest of the broken structure. Okay. So before now, I've explained to us that a market can do either of one thing. It's either the market is buying, is either the market is buying or the market is selling. So just in addition to what we are going to learn from this particular video, I will be explaining the concept of transition. Okay, I'll be explaining the concept of transition. So like I said, the market can either be in the bullish move or in the bearish move. And whichever move the market is, one thing is rest assured that the market does not go in one direction. At a point in time, the market will keep buying. And at a point, the market will start selling. Now, we want to understand what happened. What happened here before this market switched, before this market started buying at this point. And we also want to understand what happened before this market starts selling at this point. So what happened within this line? What happened at this swing point? At this swing point is what we want to talk about. And what happened here is known as transition. Okay, so it's very important for you to understand what happened within this swing point. Since if this is the daily time frame, how do you want to find entry when a market is bullish and at a point it wants to switch from being a bullish market to a bearish market, or from being a bearish market to a bullish market? You need to understand the concept of transition. So at every swing point in the market, what I mean by swing points are just this point here. Okay, for example, this is a high, this is a higher low, and this is a higher high. All right, so at every swing point, which can either be your high or your higher low or your higher highs, there is transition occurring at that point. All right, so the knowledge of transition will help you to probably make good trading decision while trading the synthetic market or the Forex market. Okay, so BBR always starts with what? Transition. And that is the reason why I have to explain that concept. So what happened is that when a market is buying to a particular point, when you get to this point, what you will see is that the market will start creating, probably you observe the market creating series of higher high, higher low, higher high, higher low, higher high. You see the market creating series of higher high, higher low, higher high, higher low, higher high, higher low, higher high. So you see the market making this move. Okay. Now all these are actually internal structure. They are actually internal structure, and that is the reason why I encourage you guys to subscribe to this YouTube channel so that whenever an important concept is released, you can get the notification. There is a video I made on market structure as well as complex market structure. If you have not watched those videos, please make sure you watch the videos because you need to understand internal structure. What is happening within a particular swing point, within a particular market range. There are a lot of things that can be studied. Okay, so please, if you have not watched it, you have to go back to watch it for better understanding. So what you want to observe as the concept of transition is that you see the market breaking a structure to the downside, and then the market starts creating series of lower lows and lower high, lower lows and lower high. Okay, so if you are to make an entry, all this, what you're seeing here is what is happening around this swing point. Okay, if this is the daily time frame or the 4-hour time frame, and probably what I'm doing here is on the 15 or the 5-minute time frame. So you want to see this move happening. This is where you want to start thinking of where you should make an entry from. Okay, so this is the concept of transition as regards to a bullish market tending to pull back or switch phase to a bearish market. Okay, and if this market were selling initially, you will still have that internal structure creating series of lower lows and lower high, lower lows and lower high, lower lows and lower high, and all you want to see is that you will see the market break that structure to the upside, come back for that retest, and then start creating series of higher highs and higher low. Okay, so this is the concept of transition when a market is in a bullish state. So what I mean, this particular thing, you want to see it at this swing point. Okay, this is what happened. This particular thing you're looking at, this is what happened at this point before this move take off. So if you want to join this move, you have to wait for this transition. After you've observed this transition, that there is a break of internal structure, there is a break of internal structure, then you want to start looking for where you can start making your position. And if you don't know where to make entries in the market, I have talked about POIs as well. There's a video on that. You go back to watch POI so that you can understand where is a valid zone for me to make entry into the market. Okay, so that is just the concept of transition. Now, when you talked about BBR, like I said, the BOT you're seeing here, BOT, simply means a break of trend, and the BOS simply means a break of structure, and the R is simply what? A retest to any of the broken structure. All right, so look at this bullish move. You see the market creating series of higher highs, higher low, higher highs, higher low, and like I said, the characteristic of a bullish market is that it will continue to break structure to the upside, and it will continue to create series of what? Higher highs and higher low. All right, now what you observe when you want to see BBR playing out is that the trend line will be broken, the trend line will be violated. You will see the market in this form. Instead of the market coming back, a pullback to continue its move to the upside, the market will break down this trend line. Okay, so once the trend line is broken, the next thing you want to observe also is, okay, at this particular point, the trend line is broken, but structure have not been broken. All right, structure have not been broken. Now, for you to observe that a structure have been broken, you need to pay attention. This is why the knowledge of market structure is very, very important. You need to pay attention to your recent higher low. Okay, so this particular zone is a structural level in this market. It's a structural level in this market, and that is why I have to draw this zone as a valid zone. Now that the trend line is broken, the next observation you want to make is what? A break of structure. Now, for a structure to be broken, the previous higher in a bullish market, the previous higher low must be taken, right? So you have the structure to be broken to the downside. Now, when you have this, then you can say that what boss has occurred. What do I mean by boss? A break of structure. Okay, so this is what I mean by a break of structure, because this was the recent higher low. So I can actually call this a boss. So this is the boss. Okay, so this is a break of structure. So this is a break of structure to the downside. So we have a break of trend, a break of structure, and the next thing we have is what? A break of trend line. Okay, so you want to see the market. Sorry, you have a break of trend line, a break of structure. The next thing that is lacking for BBR to be complete is what? A retest to the broken structure. This was a structure that was broken, and what you see is that the market will come down to this particular point to retest that zone, and then the market will switch to create a new lower low. So if you want to join, you will agree with me that this particular concept, in fact, transition is exactly what BBR does. Do you understand? But the most important thing is we pay attention to these three rules: that there must be a broken trend line, there must be a broken structure, and there must be a retest to any of the broken structure. Okay, so with this, you can decide to make an entry from this zone. And if you are the conservative type of, you're a conservative trader who prefer to wait for, to be very sure of what you want to see before placing entry, you want to see another structure that will be broken. And for every broken structure, we expect a retest to that structure. So if you don't make an entry from here, you can actually wait for this structure to be broken. And as you can see, this structure was broken. This was also a higher low, and which was in confluence with a swing point at a point in time. But you observe that structure was broken, so you can actually wait for the retest of the structure, and you take the market all the way down. So this is the concept of transition in a bullish move, in a bullish market. Okay, so I will explain the same thing is applicable to that of the bearish market. So what you want to say is, the first thing is that what? The markets have to break your trend. The markets have to break your trend line. So when you have a break of trend line in this form, you have this. This is a violation. And what I mean by break of trend line is just candles closing above the trend line that you have drawn. Okay, but having this is not enough reason why you can say, okay, BBR has played out. Like I said, it contains three parameters: the break of trend line, the break of structure, and the retest to the broken structure. So the first one has occurred, which is what? A break of trend line. Now you want to wait for a break of structure. You want to wait for a break of structure. And then all you see is that what? Eventually the market broke this structure. Now there is a break of trend, and there is also a break of what? Structure. The next thing you want to see is what? You want to see a retest to any of the broken structure. So you have this coming back to retest this. Like I said, you can actually make an entry from here, or if you are the type that you want to see good other reason why you should make this entry, you can also wait for multiple break of structure. For example, you can observe that there is a structural level here that got violated by the market. So you can wait for a retest to this particular level and take the market all the way up. So this is just the simple explanation on how the BBR strategy works. So I'm going to take you through the chart and then show you just a practical example of how this strategy can be applied. This is step index. on, this is the 4-hour time frame of what? Step index. All right. So if you check what I explained from the analogy I made, you can see that within this region, you can actually have a trend line here. You can have a trend line. So at this point in time, this trend line was broken. Okay. This is where the trend line was broken. This region, the trend line was broken around this region. All right. But according to what we said after the break of trend line, we want to wait for that break of structure. And what happened? This was the recent, you see the market creating what? A series of, from this region, you have a low, higher low, sorry, a low, a higher high, higher low, higher high, higher low, higher highs. But what we observe here is that there is a structural level at this point. There's a structural level at this point. And then what we see is that the market broke structure to the downside. The market broke structure to the downside. And then the market went back to retest at this point. One thing you need to understand is that when it comes to a rechart scenario, you must observe those break of trend line. You must observe that break of structure. But then, to know the structure that will be broken, it's important that you mark out all your zone, because this is a valid structure, structural level. This is also a structural level. Okay. Now, what you see is that the market failed to retest at this point. Rather, it went back to retest the upper structure. So it's important to pay attention to those structural levels. All right. You have to mark them out. You don't have to focus your attention on one of them. So, and what we observe is that the market starts selling all the way after the retest to this particular zone. And we are expecting that after this pullback here, the market will still crash down. But for us to start stacking entry into the market, we want to see a continuous break. Want to see a continuous break. You see the market is doing something like this. For us to find other entries, we want to see a break out of this zone, another retakes, and start finding our way all the way down. So this is how you can apply the BBR strategy. Okay. If you look at this particular point as well, there is another level where you can actually detect a trend line at this point. You can actually detect a trend line at this point. And what you see is that here, the market broke the trend line here. The market broke the trend line here. And then, like I said, after a break of trend line, we want to wait for what? A break of structure. And you see that this was a lower high. This was a lower high, and the market break that structure to the upside. And what we observe is that after the break of structure, it came back for that retest, formed this candle, this doji, and then what you see is that the market start buying all the way up. So you can literally find BBR playing out most of the time on the chart. Okay, so here you can also find another level that there is a break of trend line. So you have this break of trend line at this point. You have this break of trend line at this point, and then the trend line was broken here. And then what you see is that the market actually broke a structure to the upside at this. It broke structure to the upside at this particular level. And after that break of structure, after the trend line was broken at this point, structure was broken at this point, and then we see the market came down for that retest of this one of the structure that was broken, and you see the market crashed all the way to the upside. Okay, so this is how you can actually, so at this point, you can make an entry from this region. Remember, this is the 4-hour time frame. If I scale down to the 15 minutes, you will see this move having a very good risk to reward ratio. Okay, so like I said, they are littered everywhere on the chart. For you to see the market turning, you must observe that transition, and BBR, you can apply BBR to actually make that entry. Look at this again. The trend line was violated. Structure was broken. trend line was violated, structure was broken, and then you're seeing a retest. This is a point where the structure was broken, and immediately you see that the market came down to retest that broken structure, and it went up again and start creating, series of higher highs and higher low. See the market bought all the way to this region. So BBR is playing out everywhere on the chart. So you have to pay attention to this. And like I said, make sure you practice. Practice will make you better. Once you learn a new strategy, for you to be sure that you understand what you've learned so far, is your ability to implement it. Like I said, this strategy, you can apply it with Forex and the synthetic market. Okay. So thank you for watching. See you in the next video.